We'll now commence from the call to order for the December 10th with the Audit Committee. Please stand for the Pledge of Allegiance. I pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Can I have the roll call, Mr. Leslie?
Committee Chair Albert Hayes.
Here.
Committee Member Kenneth DeWitt.
Here.
Board Chair Mark Finkel.
Here.
Board Member Richard Bird.
Here.
Executive Director John Callahan.
Here.
Robert Leslie. Chief Engineer Robert Fulton.
Here.
Chief Fiscal Officer Tim Minicha.
Here.
Area Administrator John Hodgman.
Here.
And Compliance Officer Stephanie Ruzicki.
Here.
On the video feed, Committee Member Jeffrey Rosenthal.
Here, present.
Thank
All
you.
accounted for.
Yeah, thank you. And now, can I have a motion to adopt or revise the meeting agenda?
So moved.
Who wants to do it first?
So
Jenny?
moved.
Mr. Rosenthal with Mr. DeWitt second.
Second it. Mr. DeWitt. All in favor? Aye.
Aye.
Any opposed? Carried. Now we got, let's see. Oh, the approval of the May 14th, 2019 Audit Committee meeting minutes.
So moved.
Second.
Mr. Rosenthal, Mr. DeWitt.
Thank you. Committee business, we got some new business. We got a presentation of independent audit for year ending June 30, 2019. Mr. Minichi?
Point of order. Did you call the vote, Mr. Hayes?
Yes.
Yeah.
I apologize.
So thank you, Mr. Chair. I'd like to do a brief introduction of our auditor. You may remember that at the May meeting, the board authorized the hiring of Galeros Robinson. This is their first time serving as our independent auditor. So we're delighted to have Nora with us, who braved all elements to be here with us in person. And let me just read you a brief introduction, and then I'm going to turn the floor over to her for a short presentation. She'll walk you through the handout, and of course, delighted to answer any questions that arise from that. So Nora Galeros is the partner in charge of Galeros Robinson's government and not-for-profit group. She has over 20 years of experience in performing consulting, financial audits, and compliance engagements, serving public sector clients, including not-for-profit, governmental entities, and employee benefit plans. Her extensive audit experience includes performing audits in accordance with auditing standards generally accepted in the United States, uniform guidance, the HUD audit guide, and other governmental entity audit guidelines. Nora is a member of several professional organizations, including the American Institute of Certified Public Accountants, the New York State and New Jersey Society of CPAs. She's also served as president of the National Council of Philippine American Canadian Accountants. Nora graduated from Fairleigh Dickinson University with a master's degree in business administration with a concentration in accounting. So with that brief introduction, I'd like to welcome Nora and thank her for everything she's about to teach us with respect to the 2018-2019 audit for the Hudson River Black River Regulated District.
Thank you very much, Tim. Good morning, everyone. First, my apologies. I was here since last night, but the GPS brought me in the middle. It was half a mile short. But I'm here. And the reason why I'm here is because I really would like to meet all of you, and not just via phone, but really in person. And thank you very much for your confidence with Galeros Robinson. So I am here to present to you the results of the 2019 audit. Based on auditing standards, we are required to actually report to those who are charged with governance. So here I am. There are elements in our required communications with you. First of all, is the reminder that the financial statement is not our responsibility, the preparation of it and its accuracy. It's the responsibility of management. We do, however, assist you in the preparation of the report itself, okay? But the ultimate responsibility is that of management. One of the things that needed to be reviewed as well as part of the financial statements, the notes disclosure, which should be inclusive of all that's required by the Governmental Accounting Standards Board. Now, our responsibility is to perform sufficient amount of work so that we would be able to render an opinion on whether or not the financial statements of both rivers or the regulating district is not materially misstated. So I say not materially misstated. In other words, we are not giving you an absolute assurance that your financial statements are free of errors or fraud or non-compliance, okay? But not materially, so that people who read the financial statements will not be misled, if you will. So with that, we've rendered an opinion. We call it unmodified. That's the highest opinion an auditor could give on the financial statements that have been audited. Okay. The second element is the scope. So the scope is all of fiscal year ended June 30, 2019. So again, we issued an opinion that's unmodified. On the accounting policies and practices, a public benefit corporation, you are using what we call accrual basis of presentation, your financial statements, meaning expenses that have been incurred, whether paid or not, are recorded. Okay? Revenues, whether received or not, as long as they are earned, they are recorded. So that brings to mind your huge liability of other post-retirement employee benefits or the health insurance of retired employees. So I'll talk about that in a little bit. So that has not been paid, but that's incurred, okay, which cost a huge amount of deficit, if you will, in your financial statements, whether paid or not. Compared to what we call budgetary basis of accounting, budgetary basis of accounting more or less is close to cash basis. An example is if you float a bond and you have proceeds in the budgetary basis, that's considered revenue. But in your case, because you're on an accrual basis, that's considered a liability. It's available in cash, but it's not earned. It's a liability. So that's the difference. In the budgetary basis, for instance, a payment for bond principal, for instance, is an expense. In your case, it's a payment bringing down your liability, because in your case, it's not an expense, but a principal payment. So that is just the big difference between the two. In addition, because you are a public benefit corporation, you are also subject to governmental auditing, accounting standards board requirements of reporting. So on an annual basis, we assist management in reviewing the applicability of certain standards. For instance, in fiscal year 2019, there is what we call GASB 83, where you have to look at assets that were retired, if there were any, whether or not there's an obligation to service a component or a participant or a customer of the regulating district, and that if you retire a capital asset, for instance, is there an obligation to replace it to continue the service? But there was none. In other words, it has been reviewed, it has been adopted, but there is no impact on the financial statements. Okay. So going to the next one is whether or not we are supposed to report to you if management had causes difficulty in completing the audit also, or there were disagreements. So we are happy to know that we received full cooperation from management in terms of getting the information we need to complete the audit in a timely manner. We are also to report to you if management have consulted other accountants in if there was a disagreement, then if they have, we call it opinion shopping, if they were asking other accountants whether or not we did our work properly. So there was nothing like that at all. In other words, we thank the business office, Rick at the time was the CFO, as well as the staff who gave us the assistance that we needed. So pages 4 and 5 just talked about briefly what had happened in 2019 in terms of your assets, your liabilities, and your net position or your fund balance, and what happened in terms of revenues as well as your expenses. So I'm going to talk about or just highlight those line items that had significant fluctuations during the year. So let's go to page 4. Page 4 is the balance sheet. It's your statement of net position. What the regulating district possessed or owned, minus all the liabilities that's owed to others, and what is left, okay? So, let's just talk about accounts receivable, for instance. Accounts receivable went down by $60,000, okay? What happened? There is just, there was a settlement received that was related to a prior year assessment. So it's a timing difference. So receivable went down because of that collection. So let's talk about capital assets. These are your fixed assets less all the depreciation during the year. Okay. So there was 220,000 of improvements, but that's also offset by 245,000 of depreciation. So your assets is depreciated over time for use and for wear and tear. Okay. So in effect, there was really no significant fluctuation there. So let's talk about accounts payable and accrued expenses. Again, it's timing. There was a server installation. It was an expense and incurred, but it was paid thereafter. Compensated absences is, of course, unused vacation and sick leave. So again, the difference here, it went up by 41,000 is really because the hourly rate or the rate of employees have went up. So when you calculate what is owed because of unused vacation and sick days, it is using the most current salary rate. So that went up by a little bit. Okay. So let's talk about the 3 or the 4 items altogether. All of your amount due to the state for retirement, all of the proportionate share on the retirement and pension and other post-employment benefits, which is healthcare, as you can see, they all went up. Okay, and I'm going to talk to you about that a little bit. In note 8 of your financial statements, I'm just going to talk about the other health insurance or other post-employee benefit, that's health insurance. There is a what we call an annual required contribution, but only 31% is funded. Because what you pay towards that benefit is on a pay-as-you-go basis. In other words, those are the expenses related to retirees who are actually using health insurance. But there are also expenses related to those who are still active employees that are not using health insurance related to post-retirement. There is an expense associated with that. So, for fiscal year 2019, okay, the annual required contribution for both active and inactive is $1.9 million. Okay, the actual contribution made was $534,919. That increased your liability for OPEB, call it OPEB, by $1.2 million. The liability from last year, meaning fiscal year 2018, was $10.2 million. So at the end of 2019, your total obligation is $11.5 million. So that's not funded, in other words. But that's a real obligation that will be paid in the future. Okay. So going back to page 4 of the presentation, the net position in the bottom is your fund balance. In other words, what the district owned minus all the obligations to others, what is left. So if you look at the bottom of page 4, 2.9 million is a positive number. That is your investment in capital assets. In other words, all your capital assets minus all accumulated depreciation for the use of these assets, you have $2.9 million worth of fixed assets. But then again, it's offset by a deficit of $5.9 million because your obligations for pensions and OPEB are far greater than what the district owns. Okay? So, any question of this? Or? I'm going to, let's now go to page 5. And this is the income statement, if you will. The statement of activities in the governmental world. So, your total operating revenue went up by 104,388. That's 1%, okay, from fiscal year. That is because of some fees increases, if you will. On the operating side, operating expenses side, your operating expenses went up by 443,000. Now your revenues went up only by 104. So you are short by about, the difference is between last year and this year, your expenses exceeded 339,000 more than what was excess last year. So at the end of 2019, your operating expenses exceeded your revenues by $1.6 million. Remember, you have $1.9 million of OPEB, okay? So a lot of this is related to the other post-employment benefits. Now, there was interest income from all of your investments in your cash, 103,000. The changes in net position, meaning the actual expenses in excess of revenues is $1.4 million. Now, your fund balance was already $1.6 million in the prior year in a deficit. That's the reason why it went up by another, it went to $3 million at the end of June. So, that concludes our presentation. If there are any questions, I'm here to answer.
Not here to digest.
Mr. Hayes, would you entertain questions from senior staff as well?
Is there any questions?
No.
So I'll just ask one, if I may. The obviously the OPEB liabilities are something that's felt across state governments, local governments, something that statutorily, you reference the fact that these are expenses, liabilities we are incurring, but we are not, so to speak, putting money aside for them. Statutorily, at this point, we cannot. Is that correct? I mean, we're not. The point is, it's a things are bad all over, so to speak. It's not something we are failing to do organizationally. Right now, we cannot do that, but we're still incurring those liabilities.
Correct.
Do I have that right?
Yes.
So
Thank you.
structurally, we've just, in terms of the net position, we've basically doubled the deficit over the past year, primarily owed to the increase in the other post-employment benefits.
Correct.
Thank you for that presentation. It was very eye-opening there.
Can I just ask one other clarifying question? Nora, can you give us a sense of,
Let's
can you give us a sense, just for historical perspective, about when in the government accounting and auditing world did the GASB, the Government Accounting Standards Board, start to issue standards about OPEB?
It's now 10 years, okay, that they issued this standard. It's because GASB felt that the true expense of an entity is not really reflected in the financial statements. So although there is no legal requirement yet to fully fund it, but it would be good to have every single unit of government reflect their true and own expense.
So other governments, as John
Always have a
said,
cell phone.
like us, state and local, are experiencing similar types of changes in both the balance sheet and the income statement as a result of OPEB, if they are not setting aside resources to fund this OPEB liability.
Yes, almost all of the government units that we've audited have deficit just because of OPEB. So, some are fortunate, they have reserves, so their net position, their fund balance looks good, positive, but others don't. So, it looks really bad when you looked at it the first time. You could almost like faint because of the magnitude of the liability. Because the liability is not only for the past 10 years, really from the very beginning, because the benefit was already awarded to retirees prior to GASB 45, 68, and now 75.
So of the $1.5 million change in the district's net assets, the change in net position over the course of the year, roughly 1.2 million, or about 80% of that, is as a result of this growth in the OPEB, net OPEB liability.
Correct.
Not 100%,
Not
but
100%.
80%.
80%, and then, of course, you also have depreciation expense, which is not a cash item, but it's also really an expense. When you think about it, that contributed to the negative balance.
Thank you.
Can you turn it back up?
Just a speaker button.
Speaker button.
Here's now.
I hear you. I don't hear anyone else.
Okay. You're all
Nobody
set
else is
then.
speaking.
How about now?
I hear whoever's speaking directly into the microphone.
So we had some,
We just had way too much noise.
we had some feedback there for a moment. Sorry about that, Jeffrey.
Okay. That's it?
That's it.
That's it.
Well, thank you, Nora. That was a good presentation.
Thank you so much. Also, happy holidays, everybody.
Thank you.
And we don't have to vote, we just need to come out of
Yeah. How can I have an adjournment? Anyone make a motion to adjourn?
I'll make that motion.
Second.
Second? All in favor?
Aye.
Meeting adjourned.
11:17.